Attention all American seniors on Social Security, SSI, or retirement benefits. Major changes are coming in 2025, and your money might not be as safe as you think. New federal banking rules are targeting specific financial institutions, and some banks could soon be restricted or even blacklisted from handling direct deposits for pensioners. If your benefits go to the wrong bank, you could face delays, unexpected fees, or even frozen accounts. In this video, we'll reveal which banks are under scrutiny, what the new 2025 rules mean for your Social Security and retirement funds, and how to protect your monthly payments before it's too late. Stay informed, stay safe. Let's get into it. Before we dive in, first subscribe to our channel. Let's start with what's happening right now in the banking world. Over the past few months, we've seen major shifts in how banks handle retirement accounts, especially for those over 65. These changes aren't making headlines on the evening news, but they're affecting pensioners across the country in ways that could seriously impact their financial security. You might have noticed some subtle changes in your bank statements or received letters about updated terms and conditions. Most people toss these aside, thinking they're just routine updates. But here's the thing: some of these changes are far from routine, and they could put your hard-earned money at risk if you're not paying attention. Several major banks have implemented new fee structures and minimum balance requirements specifically targeting retirement accounts. While they market these as account optimization or service improvements, the reality is that these changes often work against the interests of pensioners who've trusted these institutions for decades. Let me share a story about my neighbor, Martha. She's been with the same major bank for over 40 years. Last month, she discovered that her retirement account was being charged new maintenance fees she'd never seen before. When she went to the bank to ask about it, she was told it was part of the new 2025 regulations. What they didn't tell her was that she had options that could have saved her hundreds of dollars annually. Now, let's talk about which banks are raising red flags for pensioners in 2025. I'm not here to bash any financial institutions, but it's crucial to understand which practices might put your retirement savings at risk. Some of the largest banks in America have implemented policies that could gradually erode your savings through various fees and restrictions. First on our watch list are banks that have recently merged with larger financial institutions. These mergers often lead to policy changes that aren't favorable to long-term account holders, especially pensioners. We've seen cases where merged banks introduce new account minimums that are significantly higher than before, forcing many retirees to either maintain larger balances or face monthly fees. Let's look at specific examples of what to watch out for. Some national banks have introduced what they call retirement account optimization programs. These programs sound helpful, but often come with strings attached. They might offer slightly higher interest rates while implementing new fees that actually cost you more in the long run. For instance, one major national bank, let's call it Banka, recently introduced a $25 monthly maintenance fee for retirement accounts unless you maintain a minimum balance of $25,000. That's up from $5,000 just a year ago. Another institution, Bank B, has started charging for previously free services like speaking with a teller or getting paper statement services that many seniors prefer and rely on. Here's something particularly concerning: some banks are pushing pensioners toward their investment products, promising better returns. While investment opportunities can be good, many of these products come with high fees and lock-in periods that aren't suitable for retirees who need ready access to their funds. I received an email from a viewer, Tom from Florida, who shared his experience with this exact situation. His bank repeatedly tried to convince him to move his pension funds into their investment products. What they didn't clearly explain were the surrender charges and management fees that would have significantly impacted his returns. Now, you might be wondering, what are the alternatives? This is where things get interesting. Not all banks are creating obstacles for pensioners. In fact, some smaller regional banks and credit unions are specifically designing programs to attract and retain retired customers. These institutions often offer benefits that are particularly valuable to seniors: no-fee checking accounts, free paper statements, priority in-person service, and even higher interest rates on savings accounts without requiring enormous minimum balances. They understand that personal service and transparency are crucial for their older customers. Let's talk about some specific red flags to watch for in your current bank. If you notice any of these warning signs, it might be time to consider moving your accounts. The first major red flag is rapidly increasing minimum balance requirements. If your bank has significantly raised the minimum balance needed to avoid fees on your retirement account, this could be a sign of things to come. We've seen cases where banks start with small increases, then dramatically raise requirements over time. Another warning sign is the reduction of in-person services. Some banks are closing branches or limiting teller services while pushing customers toward digital options. While online banking is convenient for many, it shouldn't be the only option available, especially for pensioners who prefer face-to-face banking. Hidden fees are becoming increasingly common. These might appear as service charges, account maintenance fees, or digital banking fees. What's particularly concerning is how these fees are often buried in fine print or introduced gradually, making them easy to miss until they've already impacted your account. I recently heard from a retired couple in Ohio who discovered they were paying over $300 annually in various fees they weren't aware of. When they reviewed their statements carefully, they found charges for services they had never used or had previously been free. Let's talk about what you can do to protect yourself. The first step is to thoroughly review your bank statements and any communications from your bank. Look for any new fees or changes in service terms. Don't hesitate to ask questions about anything you don't understand. Consider scheduling a meeting with your bank manager to discuss your accounts. Ask specifically about any upcoming changes that might affect retirement accounts. Get everything in writing, and don't be pressured into making immediate decisions about your money. Here's something crucial to remember: you have options. The banking industry is competitive, and many institutions are actually working to attract pensioners rather than burden them with fees and restrictions. Credit unions, in particular, often offer more favorable terms for retirees. Some online banks are also providing excellent options for seniors, with high interest rates and low fees. However, make sure any online bank you consider is FDIC insured and has robust customer service options, including phone support. Let's talk about specific strategies to protect your retirement funds. First, consider spreading your money across multiple institutions. This not only helps you take advantage of different benefits but also provides additional FDIC insurance coverage. Look into local community banks and credit unions. These institutions often have more flexible policies and better personal service. Many are specifically designing programs to welcome pensioners who are dissatisfied with larger banks' new policies. Documentation is crucial. Keep copies of all bank communications, especially those regarding policy changes. If you have conversations with bank representatives, follow up with emails summarizing what was discussed. This creates a paper trail that can be valuable if disputes arise. Consider setting up alerts on your accounts to monitor for new fees or unusual charges. Many banks offer this service for free, and it can help you catch problems early before they become significant issues. Now, let's address something that many people are worried about but afraid to ask: what if your bank is one of those implementing these problematic policies? The thought of changing banks after decades can be intimidating, but it doesn't have to be. Many banks now offer switchover services, helping you transfer all your automatic payments and deposits to your new account. Some will even help you close your old accounts properly to ensure nothing falls through the cracks. The process of switching banks can be broken down into manageable steps. Start by opening your new account while keeping your old one active. Gradually transfer your automatic payments and deposits to the new account. Once everything is running smoothly, you can close your old account. One retired teacher I spoke with recently made the switch and said it was much easier than she expected. The key was taking it one step at a time and not feeling rushed to complete the process. Let's talk about timing. If you're considering making changes to your banking arrangements, the first quarter of 2025 might be the ideal time. Many banks implement their major policy changes at the start of the year, so you'll have a clear picture of what you're dealing with. However, don't feel pressured to make immediate changes without proper research. Take time to compare options and understand what different institutions offer. Remember, this is your money, you have the right to take time making decisions about it. Here's something vital to remember: protecting your retirement funds isn't just about avoiding fees, it's about ensuring your money is working for you. Look for banks that offer competitive interest rates on savings accounts and certificates of deposit. Some smaller banks are offering significantly better rates than their larger competitors. Consider the complete package a bank offers. Sometimes paying a small fee might be worth it if the bank provides valuable services that you regularly use. The key is understanding exactly what you're paying for and whether it provides real value to you. When comparing banks, look beyond the basic checking and savings accounts. Consider their entire range of services for seniors. Some banks offer special programs for pensioners that include benefits like free safe deposit boxes, higher ATM withdrawal limits, and priority customer service. As we wrap up this discussion, I want to emphasize something important: you're not alone in navigating these changes. Many pensioners are facing similar challenges with their banks, and there are resources available to help you make informed decisions. Consider consulting with a financial advisor who specializes in retirement planning. Many offer free initial consultations and can provide valuable insights into how different banking options might affect your overall financial health. Before we end, let me share one final thought: the banking landscape is continuing to evolve, and what works today might need to be adjusted tomorrow. Stay informed about changes in banking regulations and policies that might affect your retirement funds. Remember to review your accounts regularly, keep an eye out for new fees or policy changes, and don't hesitate to make changes if your current bank isn't meeting your needs. Your financial security in retirement is too important to leave to chance. If you found this information helpful, please give this video a thumbs up and subscribe to our channel for more updates on financial matters affecting retirees. Drop a comment below if you have questions or want to share your own banking experiences. Your input helps other viewers make informed decisions.